Hey investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. This is a company I'm going to talk about is Doximity. It's a company that a lot of people have written to me and asked me to kind of cover, and it's so long overdue. So without further ado, I'm going to present to you Doximity. It's a really high quality company. I really like going through it. There's a lot here to kind of get compelled towards. The way I'll describe Doximity, well, Dave described Doximity, is helps physicians get proximity to each other. It's kind of like, other kind of financial outlets are really spending a lot of time promoting this stock. I don't kind of need me to bash on about it. I'm sure that you've seen it elsewhere. The way that they've described it is this is the LinkedIn for physicians. Um, you know, it's kind of yeah, but kind of not really. But it sounds kind of jazzy, so people like that kind of stuff. Anyway, so the way that I would say it is that this is a really high quality company, but you're paying a premium to get involved here. There's a lot to like here, but anyway, let's get and just jump in. So the past several months, if you've been invested in high growth names such as Doximity, you've seen your shares sell off approximately 40% in the last several months. Try not to take it personally. Everyone else is going through this. If you're invested in the space, it's just what's happened, right? That doesn't mean that it's kind of a reason to kind of throw these out, but it has been quite difficult to say the least. Now, don't be too eager to kind of jump right in there and double down. You got to be patient when it comes to investing, and in investing, I believe the patience is the greatest variable that allows you to compound wealth. But so few people have that patience. Everyone wants to kind of try and time the market and double down or go to the moon or whatever. But it's about time in the market rather than trying to time the market. Anyway, there's been so much indiscriminate selling, and that's the backdrop that I want you to think about. The stocks don't trade in a vacuum. I'm going to come back to that in a minute, but yeah. So let's get into Doximity. So, I mean, it came out of IPO, and it's just like sizzling hot growth rates. It obviously it's low balling estimates for Q3 that they report about is it 2 weeks away? About 2 weeks away. They're kind of lowballing estimates, I suspect, and they're kind of going to smash through on the Q3 results. Then they're going to upwards revise their guidance for Q4. Now, this is the question for you. Presently, Q4 is pointing to approximately 30% year-over-year growth rates. Can Doximity give you enough confidence as they exit Q4 that the business is going to grow at approximately 40%? Because we got to lap that Q1 result from last year, where the top line was up 100% year over year. So as it comes to lap that period, it's going to be a tough comp. And overall, for the year as a whole, does Doximity have what it takes to grow at 40%? So this is what I kind of put out for you guys, and you kind of think through it however you want to. Um, I mean, clearly it's a business that's very sticky, has a lot of visibility. So it also, if you think about it, so when the Q2 results came out last time, they actually beat their own, they beat kind of guidance by 14%. So it just like, it just sizzling report uh, gives you a lot of confidence that this is a type of management that knows how to kind of manage investors' expectation. This is really, really important. And, being able to deliver against those slightly lower expectations and smash through. So that's kind of really obviously a good thing when it comes to investing. Now, as I alluded to at the start, it's kind of going to be difficult for them to kind of come around and give investors enough confidence in like basically in Q4 when they come out and put out the guidance that they're still a high growth name. So what does Doximity actually do? So the way it is that it's a very sticky platform for health professionals. Health professionals come on there and they kind of you can coordinate your care. You can get in touch with a different physician, different colleague. You can read the latest medical news. And for pharma companies, which is essentially the customers here, it allows you to give out a very very targeted advert to reach the right physician. So you're not getting bombarded with loads of adverts that have nothing to do with you. As a physician, you're kind of interested in, let's say, Viagra or whatever. It's kind of, it's a very, very targeted advert. So you, it's something that's really like the way it works is that for medical professionals, it's really a network, and it's a really sticky network because you kind of get there and you just get so used to coordinating everything that you do for your patients via this platform. And for the pharma companies, traditionally you kind of go in and spend a day chatting with different uh, physicians, but because of COVID and just the way things have developed, those ways of kind of coming in and making those in-person meetings don't really work. But being able to target via an advert many more physicians is something that's really, really attractive for pharma companies, and they're willing to pay for it. So the what I really am compelled about this business is its ability to generate very strong free cash flows. Okay, so specifically, let's address Q2 2022. So Q2 2022, so its free cash flow margins of approximately 23%. That means for every dollar of revenue, 23 cents falls to bottom line as free cash flow. It's very similar to what we saw in the prior year, when in the prior year, in the same quarter, it was 25% free cash flow margin. So like for like, very similar, very strong free cash flow margin generation. And look at this beautiful thing here. So non-GAAP gross margins, 90%. So it's, from basically has no really costs to run this platform, and everything that comes out of the revenue comes out as gross margin. So it's something that really is sticky for physicians. It's kind of like an advertising platform with very high free cash flow margins. I mean, it's difficult to get around how compelling these financials are. Now, when it comes to investing, it's important to recognize that it's not only about recognizing great companies, but it's also being understanding that is this the best opportunity. So on the one hand, the thing that I kind of trying to get around here is what will be the exit rate from Q4 2022? Can they really grow at approximately 40% into next year? For context, analysts for the stock expect mid 20s to low 30s revenue growth rates, but let's say that they're all wrong, right? And, this business is going to grow at 40%. If it grows at 40%, into the next fiscal year, you're getting approximately 470 million in revenues. 470 million in revenues means that the stock is priced at approximately 17 times next year. So not this year's, not forward, even into next year's revenues. So you're kind of paying a premium. The stock doesn't come cheap. It's a really high quality business, but the stock doesn't come cheap. Now, as I said already many times, it's one thing to recognize what is a great company. And if that was all that there was to investing, everyone would put Doximity on their list, right? The problem is you have to not only recognize a great company, you also have to understand that the valuation needs to have favorable odds. And that's when investing kind of is quite difficult, because you can have an amazing investment, but if the odds are not favorable, you kind of you will end up with suboptimal returns. So, the thing that I really would like to get quite confident around is the sustainable growth rates that Doximity is going to put out into next year. What's more, as I already said in the introduction, stocks don't trade in a vacuum. When so many other high growth names, really high quality, profitable high growth names, are being priced so cheaply, it's difficult for me to kind of get interested in backing up and investing here. If you want to find out what names I'm investing in, don't forget to check out my marketplace. It's called Deep Value Returns. I help you become a better investor, help you by highlighting for you high quality investable investing stocks. Okay, thank you so much for listening, and I hope to see you next time. Have a happy earning season.